Oh, so much to talk about, so much to talk about. Facebook reporting, Microsoft, eBay, Qualcomm. We're going to go over it all. That and do we need to discuss Apple? We're going to show you your Newsbeat Edge of the Day, how to improve your trading. Of course, we're going to share our game plan and Forex cheat sheet with you. And then we're going to go into our question and answer. This is the Newsbeat Show. So, good evening, ladies and gentlemen. I am Mark Melnick, and welcome to the Newsbeat Show. We're going to talk about some of the stocks that are reporting, what you need to know about all of them, deciphering the earnings for tomorrow, and a lot of stuff on our agenda. So, we're going to go ahead and we're going to start off with Facebook reporting tonight. And I think this was a very interesting name over here. And basically, you could just see on the after hours trading, the stock plummeted down to 177.10, shot all the way up to 194.68, and now is just chilling around 189.20. I'm going to spell out this. I'm going to spell out the earnings, and then so you don't have to second guess. I'm going to tell you exactly what I'm going to do with them, why this is an options opportunity, and what we could do to take advantage of it. So first, let's go ahead and just really talk about what Facebook reported. I don't think people really thought that Facebook was, for example, going to report bad earnings. However, they sort of did. They went ahead and they reported earnings per share, $1.44, as opposed to the consensus estimate of $1.95. That's why you saw it take the plunge. However, their revenue was way far ahead, $12.97 billion versus the $12.55 billion expected. That's a $420 million beat, which is decent for a company like Facebook. I mean, it's not, some companies they beat by 420 million and the stock will quadruple in price. Facebook is not one of those companies. They reported daily active users are up 14%. Monthly active users are up 14%. Heck, they got me on. That's how I'm doing the Facebook Live stuff now. So definitely whatever they're doing worked for me. And they say the Q4 changes reduced daily time spent on the website by 50 million hours. Now, I know what you guys are thinking. 50 million hours. Think about that. Daily time on the website. So every single day now, daily time spent on Facebook has been reduced by 50 million hours. To put it in some form of perspective, I'm going to make a number up. Let's say there's a billion people on Facebook, and I really don't care about the number. I just care more about the perspective. In order to get 50 million hours off of that, which is, again, it just sounds like some really obnoxious number. It would basically require those people to spend 20 minutes less every day, on average, throughout the thing. Now, is that devastating for Facebook? You better believe it. I don't think wait till the analysts come out and talk their 2 cents about it. This is what the analysts are going to do tomorrow. You're going to have the group of analysts in which I call the fanboy analysts. They're going to come out and they're going to say, look, I don't care what Facebook says. I believe in this company. I love it to the very end. And I'm afraid to not raise the price target. Then you're going to have the cautious and I want to keep my job analysts who are going to come out and they're going to say, you know what? I'm lowering my price target on Facebook from $220 to $215 because of A, B, C, D, E, F, G. Now, those are the analysts who are like, look, if Facebook plummets, I don't want to look like the moron who didn't come out and downgrade it. And if Facebook shoots up and it goes over $200, which is also a very likely scenario, I want to be at least the person, well, look, I had the higher price target anyway. So you're going to get a group of those analysts. Then the real analyst you have to look for tomorrow is the analyst with the big cojones. That's going to be the analyst that comes out and basically says, you know what? I had a $200 target on Facebook, for example. I'm dropping it now to 170. That is the analyst you need to look for. If one of those analysts come out tomorrow, this stock can get pummeled. Now, in terms of my strategy, basically this. I'm going to spell it out for you, my strategy and how to trade Facebook tomorrow. If, for whatever reason, we open up between $184, $184, and $190. If we open up between $184 and $190, then all of a sudden I'm looking for an option strangle or straddle. That's basically a simple strategy where you just buy calls and puts and hope for a big move in one direction. The people who bought Facebook options, for example, let's say you bought Facebook calls and now you're looking at the stock and you're like, oh, look, it's up to 189.45. But the 190 calls closed 370 to 390. Let me tell you why these calls are valuable. These calls are valuable for one simple reason, that Apple and Google are reporting. Because Apple and Google are reporting, you're going to get a wild move in the triple Qs. You get a wild move in the triple Qs, this thing is going to explode or drop. So this is how I do it. The stock closed today at 186.89. Let's take the 190 calls expiring this week, and let's take the 182.5 puts. And basically, those close 310 by 340. Let's take the midpoint of them. Let's say the midpoint total of it is $7, meaning you could have bought the 182.5 put and the 190 call expiring this week, and you could have paid a total of $7. Listen to the math. If the total of these options are $4 or less, the total to buy the 182.5 put and the 190 call, if the total of those options are $4 or less, statistically, in the last 5 years, you would make money 100% of the time if that scenario pops out. The best way for that scenario to come is to hope that it opens up around these levels. The 182.5 put will obviously get cremated, and the 190 call will retain some of its value because the week's not over and we're walking into a Thursday. So I'm not sure if I'm going to buy this at the beginning of the day or the end of the day. Maybe I come in tomorrow and every analyst and every fanboy upgrades it and it opens up at $200. I don't know. And then that strategy is ignored. However, I think it's important that you have that strategy on hand for a potential move higher. So that's my thoughts on Facebook. Going to move on along to Microsoft, another company that reported, and this one is even much more conviction. Hint, this is my favorite idea. Hint. This is one that I am going to throw a boat at. Hint. All right, now that I'm done winking and hinting, why don't we go ahead and talk about what Microsoft reported? So Microsoft came out, they reported earnings. Everybody was thinking, is this thing going to go to $100? Everybody was thinking. They basically are going to see a benefit from the new tax rate cuts. They mentioned it just like every other company in existence. They reported 96 cents a share for Q2 adjusted versus the 86 cents consensus. That's huge. Microsoft reported $28.92 billion versus the $28.39 billion. That's a $530 million beat. Everything is looking pretty damn rosy. They said their personal computing revenue is up 2%, which is very important. Why is it very important? You remember the commercials? Hi, I'm a Mac. I'm a PC. And, the PC guy's the stuck-up dude in the suit who just doesn't get today's society. And, hi, I'm a Mac. I'm that cool kid who you wish that your son or daughter was hanging out with all the time. I just get it, and I walk around in life all cool. Remember those commercials? That was a push by Apple to basically say, stop buying PCs, buy Macs. Obviously, the fact that Microsoft is coming back and gaining on their personal computer sales is a very big deal for the company. Do not underestimate that. God forbid they open up this thing, or whatever you believe in for that matter. heavens forbid, whatever forbid, aliens forbid, if they open up this stock tomorrow exactly where it's trading at 95.18, I might throw $50,000-$60,000 worth of an option push at it. Now, let me give you the parameters. Now, I hope it opens up here. One could only pray that Microsoft actually opens up flat after earnings. And the reason for that is the call and put buyers got screwed. So if you bought the $95 puts and you bought the $95 calls, it would have costed you about $5.20, let's say. If you can buy that for $2.60, mark my words, if you could buy $95 calls and $95 puts expiring this Friday, this week, the weeklies, February 2nd, 2018 expiration. If you could buy, again, the $95 calls and the $95 puts, I would consider that a high conviction strategy. Now, if you have to be able to pay $260 or less for it. That's my stipulation. If we come in tomorrow, Microsoft's at 99, and you're like, Mark, do you still feel the same way as you did yesterday on Microsoft? No, I don't. The stock is trading at 95.15. It popped up, it got crushed, it popped up, and now it's digesting near a flat line. This is a once-in-a-year opportunity for Microsoft. This is a once-in-a-year opportunity for Microsoft. You might notice I got that cute little title there, Senior Trading Strategist. I guess by listening to my words, you could, see that little promotional title there. So just giving my strategy, how I would play it ahead of time. None of this Captain Hindsight garbage. Again, you're not going to get that from me, as you guys already know. I cannot stand people who show you a chart and show you what you could have done and talk about what they could have done. You have to do it in real time. And you have to do it in a way in which a room can capitalize on, in which a trader can make money on. I think that is an extremely important thing. So let's just remove that little title. There we go. And Microsoft, again, back the truck up if the stock opens up here. So the goal is to buy the $95 puts and $95 calls, and the goal is to pay $2.60 or less. You do that. Guess what the number is of how often you'd make money in the past 5 years if Microsoft actually did that off of earnings? Did you say 100%? Of course. Now, of course, well, Mark, past results aren't indicative of future performance. Yes, I understand the legality of that, but we're traders. Everything we do is a risk reward. This is a 1 to 10 risk reward. That would be a 10 in your favor. Okay? Simple enough? Okay, let's move on. So next on our little agenda list here is eBay. Now, I had always these weird feelings about eBay because, basically eBay, nobody really knew what was going to ultimately happen with eBay. And the reason for that was this little chart right here. And nobody really knew what was going to happen there in eBay. You basically are at all-time highs. And the reason why nobody knew is because of Amazon. Why am I going to sit here and bid on these parts and sit there and bid and get outbid and rebid and rebid and rebid? It's too much of a headache. I would rather just know that I'm getting a very good deal. And just buy the damn thing from Amazon Prime at free 2-day shipping, and it'll be in front of my house or in my mailbox shortly. Well, here's what happened with eBay. It actually exploded up after hours. Here's the funny thing. They announced in-line earnings per share, 59 cents versus the 59 cents expected. Here's a 5 minutes for after-hour trading, so you do see it a little more choppy. They announced $2.6 billion revenue versus $2.61 billion revenue expected. So they were just slightly short, pretty much in line. But here is the home run. Why are they up then? eBay reported active buyers up 5% in the fourth quarter to 170 million global active buyers. You know what that means? Amazon is getting business pulled away from it. That's what it means. Who the heck wants to sit here and bid on eBay all day? There are a bunch of people, if you remember before Amazon, a lot of the people would make a living on eBay. They would just buy crap, sell it on eBay, buy crap off eBay, resell it on eBay. They were literally like day traders using the eBay market. I kid you not. If you were unaware, there's actually, people who are making like millions doing this. It's crazy. And now a lot of them actually moved over to Amazon, and a lot of them are making cheap garbage type quality products in China, buying them dirt cheap, and bringing them over here to the US to be sold on Amazon. So the fact that eBay continues to gain market share is a very important thing for me here. In terms of technical analysis tomorrow, there's no real smart thing. I'm not going to be able to call a real good level unless it's on the intraday. So I can't give you a level now, unfortunately. I'm going to have to use like a 5-minute chart for tomorrow if I'm going to call a long in eBay. Very, very impressive. And next on the list is, oh, so much drama, Qualcomm, who's having so much problems with Broadcom, which was the old Avago, as you know, AVGO. They announced earnings, and this one is also a potential bomb play. It's a bomb play. Just like Microsoft. Microsoft's a little bit of a sexier name, so I like it a little more, but I still like this too if it opens up here. Let's go ahead and talk about Qualcomm real quick. So on Qualcomm real quick, you do see we have just this beautiful bull flag digestive pattern after hearing that Avago might not buy out the company. Obviously, it means they still saw value and they're not going to be able to take them out. Look at the stock after hours. It popped to 68.74, plummeted to 66.50, and now is pretty much flat. It's down 6 cents currently after hours. Same thing, except this one has a little bit more of a wider spread. So, $3. I'm estimating here because the bid is 80 cents and the offer is $1.18. Here's the deal. If tomorrow, I'm going to spell it out for you really simple. This could also be huge like Microsoft. Mark this down. Again, I am not here to talk your ear off. I'm here to show you real opportunities. And I'm not going to cover the whole market. I'm not going to cover all the garbage. I'm just going to cover what I feel is relevant. So that's the beautiful thing about some of the plays I'm watching. I already looked at them, filtered them, vetted them, etc. So let's say the Qualcomm 68.5 call and $68 put spread ended up being $2.25. That's the mid range. If you could buy the 68.5 calls and $68 puts at $1 or cheap in total, both of them for $1 or cheaper tomorrow, it's a home run. If you can't, ignore it. Now I know what you guys are thinking. You're like, Mark, all these trades you're giving us are options trades. If you saw the way I traded today, I traded 100% stock in terms of the positions I was opening, right? When it comes to these earnings plays, there's a very safe risk reward when you involve options. I think it's a critical part of trading. I think too many traders are scared because it's almost like the unknown. The truth is, if you ask anybody in my room, I don't really know how to trade options, yet I could still make 7 figures doing it year after year. And the reason for it is it's really simple if you wish it to be. The truth is 99% of the people in our room understand options better than I do. I don't even know the Greeks. Delta, theta, beta, weta, alpha, I don't know, pi, I don't know, whatever. But the bottom line is, you don't have to use the ignorance is bliss method. But basically what I'm doing is I'm taking a measured risk reward. I could take $1,000, for example, and let's say I want you to pay $1 for this spread. I could buy 10 of them total, which would be $1,000 risk. If they cost $1, it's $1 times 100, so it's $100 each. I could buy 10 of them for $1,000, and no matter what Qualcomm does, I'll lose $1,000 in the absolute worst case scenario. In the absolute worst case scenario. A likely scenario is, let's say Qualcomm starts shooting up to $71, $72 by the end of the week. I'll make a few grand. Let's say Qualcomm plummets for whatever reason to $65. I'll make a few grand. let's say something even worse happens and Qualcomm files bankruptcy. I'll hit a home run. If Qualcomm shoots through the ceiling, I'll hit a home run. So basically, it gives me the ability to say, I'm going to make money on this thing as long as it moves. And considering it just reported earnings, what are the odds of that happening? Extremely high, right? That's why I'm giving sort of these strategies and thoughts. If you want to know a one directional bias, you're going to have to be a part of the room, as I call it out in real time intraday, of course. Next on my radar is, do we need to still discuss Apple? And the answer is obviously yes. We still need to discuss Apple. So does Apple pop or flop? Analysts are already downgrading Apple and cutting production. We've been talking about this for a few days, and I've just been basically trying to tell you that this is going to be the major earnings risk. Why? Because people weren't really afraid of Facebook's earnings. It's not like, oh yeah, I know everybody, they uninstalled their Facebook. No, but guess what? If 20 million less people own an Apple iPhone X as opposed to 40 million people, that's tremendous. Okay? That is absolutely tremendous. We already had a couple, what I call big cojones analysts, as I say so eloquently, who literally dropped the price target in Apple underneath where it's trading. And of course, the winner would be Deutsche Bank, seeing $152 as fair value for Apple. Of course, Apple's going to be reporting tomorrow after the bell. This is going to be the major one to watch. I can't imagine Apple losing money. I already told you my projection for Apple. I cannot imagine Apple losing money. They're going to make money, and they're probably going to beat whatever consensus. That does not mean Apple's going to go higher. The key thing to watch for Apple is their guidance, and that's going to be a critical move for Apple's success. Now, maybe Apple gets through this. Maybe they just claim that they're going to guide higher anyway, whether it comes true or not. And maybe Apple just shoots up through $200. And that is a very likely possibility as well. But it has to be the number one name that you're watching if you're going to actually get a good feel of what the market's going to do in the month of February. So those are, again, my thoughts on Apple. You could, of course, see it technically here. The stock has been not following the recent market trend, right? All-time high 180.10. Yesterday, it hit 164.70. So very deep pullback. Yes, I have a lot of algorithmic lines that I draw on this, which help me call bottoms and tops. And I think we just have to really wait to see what Apple does. On Thursday after hours, we'll of course be discussing it here on the next Newsbeat Show, which will of course be tomorrow at the same time. Okay, so whoops, there we go. Wait, what are we covering here? Sorry, there we go. All right, I just got this new sheet. There we go. We have the game plan and forex sheet. Very simple game plan here. These are generally based on names that I think could just have simple moves. The truth is, we here at Newsbeat, we really look for news names and whatnot, but just two simple names for those who are moving or on the go. You could go ahead and watch this video again, or write it down, or hit print screen. It's just a really nice way to see it here. And I just wanted to really just share my game plan with you. I'm watching Atos, which is a real interesting one. And that was one we had on our game plan a couple days ago. You could see the stock is still exploding to the upside. Now, why am I giving you a name that's less than $1? Why? I'm talking about Apple, I'm talking about Facebook, I'm talking about Google, and now all of a sudden I'm talking about Atos Genetics. You know why? Because there are people out there with very small account values who are not going to be throwing in big Facebook trades, big Amazon trades, big Apple trades, etc., etc., etc. That is why I give names like Atos Genetics, because it really gives you an opportunity to multiply your account in a meaningful manner with an extremely low risk. So if you're wondering why I'm talking about this, and it's not any pump and dump garbage, I currently own 0 shares of Atos. However, you could just see the stock traded 48 million shares, so it's not like a name that trades like 10,000 shares and I'm juicing it up. These are names that you know one of the top volume producers in the market. So I'll always stick with a thicker volume name. I do think this stock can break out higher. I gave you guys a really nice hourly trigger over here. And again, that hourly trigger was, of course, as you can see, 92 cents. And just going back to the chart right here, I just want to show you what 92 cents may do for you. If you break 92, we're looking at 99, $1.05. $1.05 is going to be a huge trigger. If for whatever reason $1.05 hits tomorrow, you're going to get an explosive amount of algorithmic volume. If you're asking me, Mark, how do you know all this volume is going to come here? I used to help the top firms in the world, the largest market cap firms, in which you could probably name easily off the top of your head or count on your hand. I've worked with these firms to develop black box and algorithmic trading. And now what I've really tried to do here at T3 is bring that experience, bring that knowledge, bring that success that I have over to you by giving you these algorithmic levels in which black boxes can be buying and selling shares. So in English, if Atosa Genetics hits $1.05 tomorrow, you are going to have a massive, massive explosion of volume if you hit $1.05 tomorrow. Generally, I like to watch it. Maybe it's at 90 cents, then it goes to 95, and then I say, we're at 95 cents, maybe we'll go to $1.05, maybe I buy it here, and I hope it gets to $1.05 at that point for the explosive trigger. So watch $1.05 in Atosa Genetics tomorrow. It could be absolutely massive if that level hits, and that's why I gave it on the game plan, and I'm watching it. Next thing on the game plan I gave you guys was Santander Consumer, SC. And if you're really wondering why I gave you SC over here, they basically announced earnings. They, disappointed Wall Street. Wall Street was not too happy with what they had to report and whatnot. So what I went ahead and did is I just followed through. Maybe we get a follow through to the downside. The stock is breaking major support levels here. Every time you put a big red bar, you see how you get follow through? Look right over here on December 4th. Red bar, big follow through. Red bar, big follow through. Red bar, big follow through. I just want to see a follow through to the downside. This is my short trade of the day. Look for a breakdown of 1693, and of course that's going to be an SC. Okay, so though that's my game plan. Oh, you guys want the Forex trades? I actually got stopped out of one recently. Yeah, welcome back to the ghetto. This is my ghetto sheet. Basically, it's I basically take a screenshot of my software and share it with you. Very simple. Type of order, sell as a short, buy as a long. You see the size, which are US standard lots. The symbol, the price I'm bidding or offering at, my stop loss, and my take profit level. If you wish to print screen or watch this video again at this moment, you guys can have full access to that. So, of course, we're gonna go ahead and get to the question and answer side. This part of the segment is for room members only. You can be part of it. You can sign up for the Newsbeat live broadcast and have all your questions answered. I'll break down any single long-term, short-term, intraday stock that you're watching or holding. Not only that, I also navigate you through real-time trades intraday, including calling tops and bottoms and certain names in the market, making money consistently on an everyday basis, and that's pretty much what we're all about. So again, this part is reserved for members. We are the fastest growing trading room in America. I hope you guys enjoyed the Newsbeat Show. Happy trading, make money, and we'll see you guys tomorrow on the Newsbeat live trading broadcast. Have a wonderful evening.